So again, welcome to everybody for this webinar today that will touch upon challenges, changes, and opportunities related to sustainability reporting in the EU. This is a webinar organized by the BIOFIN project and hosted by LC Europe. And we have two speakers with us today. So first, John Garvey, who is from University of Limerick. He is the coordinator of the BIOFIN project. And then Ellen Jordan, who is PhD candidate, also at University of Limerick, and specializing in the in EU mandated sustainability reporting requirement to protect and restore biodiversity. So with no further ado, I leave the floor to you, John, please.
Thank you so much, Emily, and thank you to everyone for attending today's webinar. I'll just start with an overview of the session and a short summary of the BIOFIN project as a whole. So, Ellen, if you'd like to move on there. So I'll just briefly talk about BIOFIN's objectives and our remit. We're funded by the European Commission for a 3-year period. So we're really focused on identifying ways in which mainstream finance can be unlocked to protect and restore biodiversity. And in the corporate domain, it can be very challenging for companies to, number one, identify aspects of their core businesses that can be redesigned or adapted to better protect vulnerable ecosystems. And one of the core parts of our work is to think about the costs associated with this, not just the cost of the project itself, but the costs around reporting and disclosing these changes in a way that is efficient and doesn't, I guess, misrepresent the activity that's being undertaken by a company. So our work is quite challenging. It's obviously at the very early stages in terms of the regulatory oversight of this area, and it's under continuing review. There's an omnibus or a streamlining of regulation taking place currently within the EU. Thanks, Ellen. So one major aspect of the work in our project is to design what's called a nature-based solution dashboard. So a nature-based solution is an overarching definition of activities that are nature positive, that involve communities, with the view to protecting and restoring ecosystems. Within this dashboard, then, we have 3 different modules or components. One is a database that categorizes nature-based solutions so that if innovation is taking place in one setting or scenario, it can be accessible and adapted for other settings that may also use a similar nature-based solution. We also have a data analytics and underwriting engine where we try to evaluate existing impacts and dependencies on biodiversity and identify ways in which an investment or a change in process can better protect and restore those biodiversity and ecosystems. And the third component is this business builder, which looks at how stakeholders can be engaged effectively and how nature-based solutions can be governed and used within a corporate setting. Thanks, Ellen. So I'll pass over to Ellen now, who will talk specifically about the Corporate Sustainability Reporting Directive and its challenges. Thanks, Ellen.
Thanks, John, for the introduction, and thank you to LC Europe for hosting the webinar today. So I suppose the purpose of the webinar is to give a broad overview of how sustainability reporting frameworks are changing, what some of the challenges are, and how companies can actually use these frameworks to progress their sustainability objectives. So particularly in the context of the CSRD, but sustainability reporting frameworks in general are changing very rapidly. And it can be quite difficult to understand what obligations your organization might have over the next few years. So what we want to do here is to try and provide some clarity as to what the CSRD requires, how it interacts with other reporting frameworks that have come into effect over the past couple of years and will continue to do so over the next few years, and what the most recent updates from both the European Commission and EFRAG, which is the European Financial Reporting Advisory Group. So they are the technical group that are tasked with drafting European sustainability reporting standards and revising those standards at the moment. So the CSRD requires companies to disclose sustainability related information based on what's called a materiality assessment, which I'll go into a little bit more detail in a few minutes. But the main objective of the directive is to try and provide relevant, comparable and reliable information to stakeholders. So as it stands, sustainability reporting to date has been generally on a voluntary basis. So based on various different frameworks, various different sort of voluntary initiatives that companies can use to disclose sustainability information. The CSRD is the first time that companies are actually being mandated to disclose on these issues. And the main objective within this directive and as part of the EU Action Plan on Financing Sustainable Growth is to try and push more capital into sustainable investment to try and manage the risks that arise in relation to sustainability matters. So whether that's climate related risk, whether it's to do with social objectives that companies impact and can be impacted by, and to try and foster a more long-term view and a transparent view of financial and economic activity. So who does the CSRD actually apply to, and how is this going to develop over the next few years? So currently, the first wave of reporters prepared their annual reports in compliance with the CSRD for financial year 2024. So all of the sustainability information is disclosed as part of the typical annual report, which again is the first time that has been mandated. A lot of voluntary frameworks and a lot of voluntary initiatives allow companies to prepare a separate sustainability statement. So by incorporating sustainability information as part of the annual report, it's an attempt to try and bring these issues to the fore as much as financial disclosures are. So these large undertakings that have been required to report for financial year 2024 are essentially the largest undertakings across the EU. So what that entails at the moment is that there must be more than 500 employees on average employed by the organisation, with either a 25 million balance sheet or a 50 million net turnover within the year. The next two waves of reporting is expected to come in. Initially, it was for financial year 2025 and 2026. Again, that has changed based on some of the feedback from stakeholders and has resulted in the European Commission pushing this out by 2 years. But as it stands, other large undertakings would have been reporting for financial year 2025, and then the next phase would essentially apply to listed SMEs for financial year 2026. So these large undertakings who have already reported in line with the CSRD are public interest entities. So what that means is that they're either listed on an EU exchange, it applies to credit institutions, or insurance undertakings. There is the allowance in the directive for member states to designate other public interest entities. Ireland specifically doesn't take advantage of that possibility, but other member states may. So the individual supervisory authorities can designate specific companies that fall within the scope of a public interest entity. Based on the omnibus proposal that was issued in February of this year, a stop the clock directive has been implemented, and that's already transposed into member state legislation. So what this has done is push out the next two waves of reporting. So large undertakings and SMEs don't need to worry about disclosing based on these new standards for another 2 years. Okay, and that's based on the stop the clock directive. And that applies irrespective of any of the other decisions that the Commission is being expected to make in the next kind of 6 to 12 months that that directive has already been implemented. After the second and third phase, there is the requirement for non-EU undertakings to report under the ESRSs from 2028 onwards. So that's non-EU undertakings that have a substantial business within the EU. So it's the limit at the moment, or the threshold at the moment, is for 150 million euro. The omnibus proposal increases this threshold to 450 million. So the CSRD is expected to apply to essentially all companies within the EU, aside from micro undertakings, subject to some of the changes that the omnibus proposal puts forward, which again I'll kind of go into in a little bit more detail as we progress through the webinar. So the future outlook based on this proposal as of February 2025 is, first of all, to increase that employee threshold to 1,000. So this would remove some of the companies that have already reported for financial year 2024. They'd fall outside the scope of the CSRD for following years. And this would also remove a lot of the companies who would have fallen within the second wave of reporters. The proposal also suggests excluding SMEs across the board. So even listed SMEs who are on an EU exchange would no longer be required to report based on these ESRSs. The other kind of major changes that are proposed by the omnibus is to extend the value chain cap. So the value chain cap is a limitation on what the sustainability reporting standards can specify that companies must disclose. So it's intended as protection for smaller companies that may be within a large organization supply chain who could be asked for a volume of information that they don't have the resources or the ability to gather. So as it stands, that value chain cap only applies to what the standards can require. The omnibus proposal puts forward the suggestion that that cap should be extended to also limit what reporting entities can actually ask their suppliers for. So rather than limiting what the standards can require, they can also limit what the larger undertakings can request from their suppliers. There's also the proposal to eliminate sector-specific standards. That was something that was intended to come in on a phased basis. So there'd be specific guidelines and specific standards that individual sectors would have to report on, which is already in existence in voluntary frameworks such as the GRI, the Global Reporting Initiative. They set out specific material topics or areas that individual sectors would have to report on. The omnibus proposal has said that this is no longer going to be implemented at a European level. The final kind of major change from the omnibus proposal is to change the requirement for assurance. So again, as it stands with this first wave of reporters, all that's required from the auditor is a limited assurance of that sustainability information. So the auditor is required to give an opinion as to whether the information is being prepared in accordance with the reporting framework. Reasonable assurance was to come in on a phased basis again. So in years to come, auditors would be expected to give essentially the same level of assurance that they give to financial statements. So the omnibus proposal has removed that requirement. That's the main changes that kind of come from this proposal. There are more individual technical requirements, but this is the major elements of the changes. So this has been debated by the Parliament and the Commission over the past number of months. Last week, the draft proposal that had been put forward was actually rejected by the European Parliament. So this, creates even more regulatory uncertainty going forward. It was a very close margin as to the rejection of the proposal, and it's not really clear whether the rollback was seen as limiting to far too great an extent the amount of sustainability information that could be disclosed, or whether it was seen as not going far enough and not removing enough red tape to improve European competitiveness. This was the main sort of motivation for the omnibus proposal, it was seen that the European Union's volume of regulation in relation to sustainability was impacting competitiveness. So it's not yet clear whether the rejection of this proposal was as a result of going too far or not going far enough. So I'm going to go into a little bit more detail on what the European Sustainability Reporting Standards actually require. So there are 12 standards as part of the ESRSs, 2 of which are cross-cutting. So what that means is that these apply to all organisations, irrespective of the topics that they find to be material, irrespective of what's most relevant for their company or for their sector. So these cross-cutting standards essentially set out the basis of preparation of the sustainability report, some of the processes that they've used to prepare it, and general disclosures that are required by all companies. The 10 topical standards then relate to various different environmental, social, and governance related issues. So there are 5 environmental standards, 4 social standards, and 1 governance standard, which relates to business conduct. So what these standards require and what the CSRD requires of companies is to complete a double materiality assessment. So to work out what are the areas in which we are having an impact and what are the sustainability related issues that might have a financial impact on our organisation. Those financial impacts could be risks or opportunities, and the impacts can be actual or potential. So across all of these different IROs, the materiality is assessed based on the scale of the impacts, the scope of the impacts, the likelihood of the financial risks or the financial materiality, and this can be on an actual or a potential basis. The materiality assessment is based on information that can be reasonably acquired without undue cost or effort. And this is a principle that's been introduced within the revised standards, which are the technical advice is being brought to the European Commission at the end of this month. So that undue cost or effort principle requires that information is gathered within reason. So essentially it gives a bit of clarity on the extent of work that companies are expected to put into establishing their double materiality assessment, and how useful that information is going to be for their stakeholders and for the users of those statements. Companies are then required to disclose the relevant information on the topics that they're deemed material. So you won't have organisations reporting based on 12 standards. The materiality assessment defines what specific elements of those environmental or social or governance standards are relevant for that entity, and that's the information that they then disclose. If we have a look at some of the specifics included in these ESRS 1 and 2, which set out the general requirements and the general disclosures required as part of the sustainability statement. ESRS 1 sets out how the double materiality assessment process will work. So how do you go about engaging your stakeholders? What kind of external expertise is required in preparing your sustainability statement? To what extent are you expected to work out, where those impacts are coming from, where those risks might be stemming from? How much are you expected to invest in processes that can allow you to complete a useful double materiality assessment, all of which is contained in this principle of the undue cost or effort. The preparation of the statement is based on fair presentation, which is a very similar concept to true and fair view. Essentially, it means that it's a principles-based approach, where if the guidelines and if the rules included within the standards don't allow you to give a fair presentation of your organisation, you need to go beyond those standards or go beyond those rules. And that's the basis of IFRS standards in terms of financial reporting. It's the basis of European financial reporting requirements in general. So it's to apply the same to sustainability related disclosures. The ESRS 2 then, general disclosures, sets out the basis for preparation for the statement. So whether it's on a consolidated basis, whether it's an individual entity basis, what kind of time horizons have been used. The governance element here within general disclosures relates to what kind of administrative and management systems you have to enact your sustainability related, policies, actions, targets? What kind of supervisory bodies do you have in place that have allowed you to prepare the sustainability statement? And again, setting out how exactly you establish what your impacts, risks, and opportunities are, your IROs. And again, just gives some general disclosure requirements. So in terms of the actions that are being implemented in relation to sustainability issues, the general disclosure requirements, and any changes in presentation compared to prior periods. So this is just a quick sum up of what the environmental standards are. I can see that we're kind of pushing on time a little bit, so I'll just fly through these. So what's really important to remember in terms of these sustainability reporting standards, it's how interconnected a lot of them are. So not only the interaction between the environmental standards themselves, like the example I've given here, if we look at one of the other social standards in terms of affected communities, that again can be really relevant if we're looking at biodiversity and ecosystems or water resources. Just to note one major change here from the revised ESRSs that EFRAG have proposed. Water and marine resources has now just been changed to water. So marine resources are to be encompassed as part of biodiversity and ecosystems rather than fitting in as part of a disclosure on water. In general, the revision from EFRAG has clarified the interaction between environmental standards between one another and how they relate to those cross-cutting standards. So rather than duplicating a lot of data points that might be encompassed in general disclosures or general requirements, to streamline all of the standards that companies are expected to report on, and gives a bit of clarity as to how they interact with one another. The main takeaways then from the proposed revision of these standards that EFRAG has prepared over the last few months is to reduce overall the administrative burden. Now, they've kept, for the most part, the substance of the disclosures, in the sense that a lot of the reduction in data points has been the removal of voluntary data points. So the only things that are included now in the standards are mandatory disclosures, rather than including examples such as what a company may disclose. This has all been moved to non-mandatory illustrative guidance, which can be found in a separate document, and it provides more technical advice really on how companies are expected to report and what might be included in their disclosures. Again, as I said, it clarifies what the interaction is between the topical and cross-cutting standards, and it has really tried to increase interoperability with other reporting frameworks, such as the IFRS sustainability standards. So to try and bring some of the concepts and some of the principles and definitions from those standards that are already in place and ensure that they align with what's required by the ESRSs. Just to touch briefly on the voluntary SME standard, which may be particularly relevant for some of the participants on the call. So this is relevant for SMEs that fall outside the scope of the CSRD, both in its original form and in the proposed level of scope that's been put forward by the omnibus proposal. So it's not based on double materiality. It's a far lesser amount of work compared to what's required for full CSRD reporting for companies that are within scope. There are two different levels of this voluntary standard, and one of the key parts of it is that it sets out those limitations of what larger undertakings can ask their suppliers for. So it gives a lot of clarity for non-listed SMEs and for micro undertakings who may be part of a larger value chain, who then are required to provide information to the larger undertakings to facilitate their reporting in line with the ESRSs. So this voluntary standard limits really what can be requested from those undertakings and provides a lot of certainty into what they actually need to be able to provide and understand about their own business models. Just to briefly kind of run through how the CSRD interacts with two of the other major reporting frameworks that have come into effect. The taxonomy is in effect already, and the CS3D, the Corporate Sustainability Due Diligence Directive, is to be transposed in 2027. So companies that are obliged to report under the CSRD must also report on the alignment or eligibility of their activities with the taxonomy. So the taxonomy is a classification system for environmentally sustainable activities. And it sets out what an organization is required to do to be able to classify those activities as green or as environmentally friendly. So as it stands, as I said, all companies that are subject to the requirements of the CSRD must also report on the taxonomy. The omnibus proposal has suggested an opt-in approach where taxonomy reporting is only required if the company is claiming to be taxonomy eligible or taxonomy aligned. So they must contribute to one of these 6 objectives and do no significant harm to the others. There are also minimum safeguards that must be in place in terms of human rights protections, corruption, fair competition, and taxation. So just to bear in mind how the omnibus proposal might be affecting those obligations as well. But as it stands, anyone obliged to report under CSRD must also report on taxonomy alignment for eligibility. Finally, then, the Corporate Sustainability Due Diligence Directive is applicable to really the largest companies within the EU. So those with more than 1,000 employees and a global net turnover of more than 450 million euro. So it sets out the requirements for what level of due diligence companies are expected to carry out within their supply chains, so in relation to human rights and environmental impacts. This, as it stands, extends to the entire supply chain. So, business partners of business partners of business partners. It has been proposed that this is limited to solely direct business partners unless there's plausible evidence of a violation of human rights or environmental standards throughout the supply chain. It also proposes reducing the frequency of monitoring from every year to every 5 years, and it reduces or removes the minimum penalty requirement. So as it stands, there's a minimum penalty of 5% of net turnover for any non-compliance with the CS3D. So the omnibus proposal suggests removing that minimum penalty and allowing individual member states to decide what penalties, if any, would apply. Sorry, I know we've run slightly over time, so thank you very much, everyone, for your time. Just to note, what we would hope to come from this webinar is that we would organise a follow-up workshops where we could get a little bit more interaction and feedback in terms of how all of these reporting requirements and how a lot of the uncertainty that's arisen at an EU level is impacting decision making within your organisations, if at all. So if there is interest in a follow-up workshop, we'd really appreciate it if you could register your interest via the QR code, and we'll also share a link with participants following the webinar today. So thank you so much, and thanks again to LC for hosting us.
Thank you very much, Ellen and John, for this very clear presentation. Perhaps you want to copy the link of that QR code also in the chat if people want to access it right away. Because you can also, if I'm not wrong, leave your feedback about the presentation in the
yes, okay,
forum,
apologies.
right?
1 second, I might just stop sharing and I will pop it into the chat if that's okay.
No problem. Thank you. So yeah, we have a few more minutes. If anyone would like to ask a question to our speakers, so feel free to raise your hand or just open your mic, or if you prefer, drop your question in the chat. And thank you for the link, Ellen. So does anyone has a question? Or is there something that you would like to know more in either a follow-up webinar or some outcomes from the BIOFIN project that we could dig deeper? No questions so far? I do have one in the meantime. So you mentioned a couple of times the IFRS, so the International Financial Reporting Standards, and the GRA, so Global Reporting Initiative. So those are global reporting initiatives. How do they link with the CSRD,
CSRD.
the European Directive?
So the GRI, or the Global Reporting Initiative, has really been the leader in sustainability reporting for the last couple of decades. But their approach is based purely on impact materiality. So they don't take this double materiality approach that the CSRD adopts. So just to reiterate, the CSRD, it looks at both what the company's impacts are and also what the risks and opportunity of sustainability related matters are to the company. So the GRI just takes one perspective and it's also voluntary. The same with the IFRS, it's a voluntary initiative. The two sustainability standards, S1 and S2, relate to climate change specifically and environmental sustainability in general. And the IFRS's approach then only looks at financial materiality. So it only looks at the financial risks and opportunities from sustainability issues. So the CSRD kind of, bridges that gap between both and applies both perspectives.
Okay. Thank you. I see there's a question from Eleni about the NFRD, so the Non-Financial Reporting Directive, which was in place in Europe before, I think. So is it still applicable with the
CSRD? So no, the CSRD has completely overridden the NFRD essentially, and the only companies that would have been subject to the requirements of the NFRD comprise the first wave of CSRD reporters. So it only applied to those largest organizations. So the CSRD expands a lot of the information that would be requested, and it also expands the scope of who's required to report.
Okay, thank you. And we have a question from Luis. Outside of the EU, are there any relevant and widely reporting frameworks?
So again, because it's all voluntary outside the EU at the moment, those two, the GRI, the Global Reporting Initiative, and the IFRS would be the two main ones. The IFRS specifically, they established an International Sustainability Standards Board who published those two voluntary standards, but that they would be the main ones outside of the CSRD.
Okay.
Right, thanks for putting that in the chat. Perfect.
I do have one more question, more related to the voluntary reporting you mentioned for SMEs. What are the motivation, or for those for who it's not mandatory? What are the benefits of
Why would they?
Why would they? Yeah.
Yeah, that's a great question. I suppose there's increasing pressure from stakeholders. So whether that's your consumers or whether it's investors, there's kind of a greater emphasis on, first of all, being aware of sustainability risks, but also impacts, particularly from a consumer point of view. There is so much more awareness now of the impact that companies are having. And I suppose it is really beneficial for smaller companies to be able to kind of get ahead of that in a way and use that voluntary standard to be able to report meaningfully in ways that their stakeholders are interested in.
Yeah. Okay. Makes sense. Thank you. And you also said that, so those reporting guidelines, there are documents available for companies to follow.
So the voluntary SME standard is available, and that's not subject to revisions at the moment. The ESRSs are available online, but they are very much under review. But you can access on the EFRAG website. I can put it into the chat here. I'll get the link. On the EFRAG site, you can actually see what the proposed amendments are in paragraph by paragraph detail for each individual standard. So I'll pop the link in here. And that goes into real detail on what's been changed within these standards.
Thank you. Is there any more question from the participants? No. Doesn't look like so. So, well, I think we can close the webinar now. I'd like to thank you again, Ellen and John, for your very clear presentation, and I thank all the participants who joined us today. We'll send the form again by email. So please register your interest if you want to share more about your own challenges and reflections on the subject of sustainability reporting. for your company. And of course, also follow the BIOFIN project for more updates and exciting developments in the months to come.
BIOFIN-EU